Alan Nuckman of Agora Financial joins us now for the weekly options alert. Good to have you on our show,
Great to be
Alan.
here.
All right, let's take a look at the broader market. You have to be pleased. You have been bullish on this market,
Right.
and here we go.
Here we go, boom breakout. So it's solid move to the upside. It's deja vu all over again. We've seen this time and time again where you get those quiet times and the markets are very worried, a lot of anxiety and angst. Now that's turned into ascent, and let's see if we can chase those new highs once again.
It is an options expiration week, and you have some plays that are coming off the board on Friday.
Right.
So tell us what's going on with your trade
Obviously,
tracker.
we had a very tough couple of months in the market moves, being bullish. So we had some plays on. We had Starbucks and Hewlett-Packard that looked like they're going to expire worthless. That's the worst case scenario that can happen with options. That's one of the best attributes of trading options is that you know your risk, the worst case scenario, no matter what happens. Also, Facebook is a great example of using options to have staying power because that dipped all the way to 170. If you had the stock, you weren't going to hold on to that. It's come all the way back. We're back to the 190 level in that Facebook, so we're about break even. Let's see if we can get a little bit of a pop in the next couple days.
That was a good example. Taking a look at your trade tracks that we're watching for November, what do you see happening there?
AMD taking off, back above 30. Verizon very close to its highs. Exxon, and then we've got the IWM, which is the Russell 2000, looking for a little bit more of a rubber band snapback, but importantly, we have 30 days in those plays.
And in December, what's happening there?
FireEye's broken out as well. It's above 15, so very close to the 50% target that we're looking for. Bank of America, we sold half of that yesterday ahead of the earnings, so there could be some more, but most importantly, we have a December option just in case it does back off.
Your WPI trade trigger for this week is pointing to Cleveland Cliffs. Now, that's really a commodities trade here.
Right, we're trying to mine some money here.
I like it.
So the smart money likes this steel play. A lot of money going into this CLF stock. Now this is a stock that's dropped from 12 down to 7, made a kind of a double bottom here. 10 was the breakdown level. So if we look to see if this market can come back to its breakout, as it often does. The January, I know it's a January option, that's 90 days of time. It was only $25 more expensive than November option, so there's no reason not to do it. So the $5 call is deep in the money. It hasn't been to $5 since 2016. And if this stock gets back to that $10 breakdown, that option will double in value.
That is true. You can buy a weekly in almost every month here for these shares. So let's take a look at your trading floor takeaways. S&P 3000.
Believe it or not, we've been trading sideways. I know it doesn't feel like it, but between 2,800 and 3,000, a wide sideways range in the S&P since March. That target's 3,200 on this breakout. Let's look for some follow through.
And you were calling this the season of Pleasin.
Yeah, we've got the first day of earnings yesterday, and the banks billions, just the 5 banks came out with profit for the quarter of over $20 billion.
Wow.
A nice way to start things off.
And number 3 on your list?
1% away. It could be today. But yesterday we were 1% away from the all-time forever highs. Once again, we've done this before. We've seen this comeback climb multiple times, and it looks like we're up and away one more time.
We'll see what happens with the Dow and the S&P there. Thanks so much for being on our show.
Thank you.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.